Ladies and gentlemen, good morning. Welcome to the second day of our conference. This is quite unusual for a lecturer at Heriot-Watt. People have turned up. It's a Sunday morning as well, which is one reason why I'm wearing something bright and colourful. And a Sunday morning, usually if I'm behind a microphone, it means I'm about to preach, but you'll be glad to know there are no Presbyterian sermons today. Although, of course, that is very good for Scottish banking. Ladies and gentlemen, welcome back to those of you who are here. Welcome to those of you like Bill, who's kind of trying to scuttle out by the looks of things. Yes, only just showing up and already leaving. For those of you who weren't here yesterday, my name's Robbie Mochrie. I've been involved with the currency group for, I think, about 3.5 years now. It started in lockdown. I needed something to do. I'm delighted to be chairing this session, and I thought that I would abuse the chair's privilege by saying a few words before we actually begin. Part of it is that yesterday when William asked a question about financial services, I really rather blew it. Now, I suppose the short answer to William's question would be to point out that an old saying that I don't mind who writes the laws so long as I administer them. And I think that's very much one of the situations that we have here. You can have all sorts of legal frameworks which we talk about and then set up. What is actually important is how we interpret those frameworks and how we give the effect to them. And also, I would have to say that what we've been talking about yesterday, we talked about the Ministry of Possibilities, we talked about the Ministry of Nuts and Bolts. We are very much in the situation, I think, in this conference of being part of the Ministry of Nuts and Bolts. Possibilities are for another day. We're talking about the technical rules which have to go around setting up a banking system, a monetary system. And I think that just to remind you what I talked about yesterday, in 1933, when Franklin Roosevelt became President of the United States, there was a genuine possibility that the entire monetary system of the United States would collapse, that the dollar would overnight become worthless and no longer be accepted as payment, as money. That's what goes wrong. And that fundamentally, and a point which I will come back to if I have time at the end of this session, that is important for what we do with a Scottish currency. We have to have a Scottish currency. So that's, let me just explain where the nuts and bolts come from. Last week I was down in Cambridge, staying at one of the university colleges. Because the laundry had been stripped out to be replaced, I had to go and find a coin laundrette. I haven't used coins for years. So I went into a post office with a £20 note, handed it over and said, "Can I have £20 in coins?" And they said, "No." "Oh, we can't give you coins for cash. It's against anti-money laundering regulations." And you're laughing. Well, I did want it for laundering, I suppose. So. But I'll stick to the day job. But what I think is important here is the way in which the actual way in which we operate. Those money laundering regulations are not set by Britain, they are international. If we want Scotland's currency to be accepted everywhere in payment, then we actually have to conform to international regulations. We have to start thinking at that level of detail now. So that's what this conference is about. Nuts and bolts, not possibilities. And there are many things which we could do, which would be very interesting, once we have a currency. But let's get the currency sorted out first. And so in that context, ladies and gentlemen, I'm delighted to be chairing this session at the start of the second day. You will see from the programme that we only have 2 speakers scheduled. The original plan was to have 3. And so I'm expecting that our conversation this morning can be a little bit more informal, but still finish in plenty of time for us to catch up, have a look at the stalls, and have plenty of conversation with each other. Let me introduce Luke Bates, who is joining us from Spain, where he has recently set up a cycle touring company. This is Luke's way of escaping from the back room of banking. His area of expertise is the management of prudential regulation, and I saw as he was going through his slide desk that he has beautifully prepared slides, much better than the slides I offer my students at Heriot-Watt. I really should have got taken up Luke's offer to be a guest speaker in my money and banking course. But he has beautiful slides and plenty of experience of dealing with senior management in banks and the Prudential Regulation Authority in the Bank of England, most recently in a post with Tesco Bank. Luke has been a long-term supporter of the Scottish Currency Group, but I think this is the first time that he will have spoken in public about the issues which we're dealing with, largely because of his position in his previous job. Tesco Bank's loss is therefore very much our gain. So I'd like you, I hope I've managed to talk long enough for us. Yes, I'm getting the thumbs up over there. I hope that we've managed to talk long.
Good morning. Can everyone hear me okay? I'll take that as a yes. Robbie? Yeah? Great, okay. Yeah, actually, it rained most of yesterday, which is a bit of a surprise and not a pleasant one, but we're back to sunshine today, so all is well in the world. Yeah, I joined yesterday, so I hope everyone enjoyed it and had a great night last night too. I'm sure it'll be a great day today, and we'll try and get off to a good start. Sorry I can't be there in person, as Robbie explained, I'm here in Spain, so delighted to join from this electronic means. So despite that, you probably tell from my accent that I'm actually very familiar with the host city. I went to school in Dunfermline myself, and after a little bit of time away from Dunfermline, I also spent 7 very enjoyable and educational years at Dunfermline Building Society, which was foundational for me. Learned my trade and ultimately ran the Treasury Department there before moving on a series of roles in corporate finance and banking over the next 15 years. So unexpected fact is that I've also actually raced my bike around the field outside the conference centre, so I can picture the scene very well. So enough of that. Let's get into it. So I'm tasked with talking about central banks and payment systems. So if we move on to the next slide, we'll get into the content. Yeah, so this conference has already, and it will continue to talk a lot about the benefits and necessities of introducing a new currency in an independent Scotland. The real focus of this session was, I guess, a point Ian made yesterday, that if no one can practically use the currency in the ways in which the Scottish people have become used to, be that at Boots or anywhere else, then it won't be much use to the business or the businesses or general public. So what I want to do in this session is give you a little bit of background on the current UK system to use as context. It's one I'm most familiar with, so it's easiest to talk to. And with that framing, try and bring out the critical role of the central bank, and I guess therefore the government to some extent. Give you a flavour of the other parties that are involved in payments, and perhaps speculate on their likeliness to want to get involved in a Scottish currency. Look a little bit at the international context ahead of the later speakers in the day, giving you more details on that. So a lot of what I'm going to say dovetails with both what Tim and Ian said yesterday. So so let's get into it. So next slide. So before I go all technocrat and financial, I just pausing again to reflect on what we're doing here. What are the cynical views we're trying to combat? What is the point of the conference? What we're trying to do here is highlight the issues with the Scottish currency, get some discussion, engagement, thinking going. what is the problems we're trying to solve here. So I think, you know, if you think about what would be the mainstream media, what would the mainstream media say about payment systems and central banks? I think what I'm trying to address is the perspective that in the likely event Scotland did get independence from the media, the one of the many things the country wouldn't be able to do or afford would be to have efficient modern payment systems. I think we may find that they would say having real-time payments wouldn't work, credit cards won't work, bank transfers will seize up, and complete paralysis of the economy. So that, whilst that wouldn't be my view, and I don't think it'd be many people's view in the room, the one thing I would say, and I guess it's a theme from what we've heard so far, is that if serious thinking isn't done, isn't applied well in advance, really from any time now, and specifically during that 2 or 3 year transition period, then actually they may be proven correct. So we do have to take action if we want it to work. But with good planning, shouldn't be a problem. So we'll move on to the next slide, yes. So I'm going to just use a simple story as a context for the explanations on payment systems. So it isn't an Apple product, it's just an apple. It's a simple story. A person goes out and buys some apples. Not particularly sexy, full of intrigue, but someone has to do it. So in my example case, a lady called Morag, she's got money in her bank account, she's got her debit card in her pocket, with nothing else, heads out towards a grocer, no fear, she can't pay for her planned purchases. You know, it's an entirely common procedure. You go into the shop, you pick up your apples in this case, go to your self-service counter, ring them through, flash your card at the hardware, or you'd use your phone or your watch or whatever it is, you secure the payment, get your receipt and off you go. Very easy. But there's 2 points to that. One is you don't even think about it, it just happens. So how do we get to that stage? And also, what else has to be in place for that completely common occurrence to occur? So move on to the next slide. Who's involved? So it won't be a surprise to anyone that the commercial banks are involved. You have your money in your bank account, your bank will issue you with a debit or credit card, so no surprises there. Obviously, you've got payment systems, you've got machines at the till, you have your phone, Google Pay, Apple Pay, whatever it is. So you probably won't be surprised to understand that they're involved somehow, somewhere. I guess right in the middle, central banks. To the lay person, I suspect that the heavy involvement of the central bank is not so obvious. So first of all, we'll look at the example and we'll go through that section. So next slide, I'm just showing you that there's a lot here, but actually it's completely massively simplified versus what's actually going on. But if we break down this is a faster payments. As this is Visa debit, they take that information. The payment gateway sends the information to Visa debit. Visa debit will do a myriad of things, including fraud. Ian talked about that yesterday, but actually fundamentally checking is there money in the bank. If there is, it authorizes it and pushes it out to the bank. The bank then interacts with faster payments and the other banks. Confirmations are sent out. There's a lot going on, but that's all happened in seconds, and it has to happen quickly. it has to happen efficiently, and it has to happen accurately, and it has to happen, like you say, almost immediately. So that's a faster payment, near real time payment sequence. And what does that tell us? Well, for me, it tells us the commercial banks are under surprisingly heavily involved. Payment service providers such as Visa, Stripe, PayPal, heavily involved. But where and how are the central bank involved? Hopefully I'll be able to explain that in the next wee while. So if we move on, what we're going to focus on next is the bit of the diagram to the right of the dotted red line. We skip on to the next slide. So three parties there have represented the two banks involved in the faster payments network. But really, what's happening in the faster payments network there? Who is that? What's happening? How do these three talk? So just move to the next slide. So a bit of a simplified diagram, but we see the central bank come in here. So starting from the start, the central bank is the bank for the commercial banks. Tim talked about that yesterday. You'll hear that, I'm sure, a lot. And in this case, we've got the both Morag and the Grocers Bank. They have bank accounts. In this case, at the Bank of England, we're talking about UK at the moment. So they have a central bank reserve account. And you would expect that structure to be replicated internationally in an independent Scotland with the Scottish Reserve Bank. So that reserve account acts as the current account for the commercial bank. So and bank transfers between banks involve the Bank of England, a lot of use of the word bank here, involve the Bank of England moving reserve balances from one bank into the other. All the GB reserve balances, as Tim said again yesterday, sit with the Bank of England. They have to be there. They can't be anywhere else. So if you imagine sort of across the UK, or would be across Scotland, people are paying for things, debit cards, 24 hours a day, 7 days a week, lots of small payments. They're between one bank and another. Someone from HSB is buying something with some of the Barclays card, RBS and Bank of Scotland, Half, whatever. There's a lot going around the system. So just the actual practicalities of how that works in the background is the Bank of England accounts for all those transactions. That information all gets sent into the middle. They don't do real-time settlement, but what they do is 3 times a day, they'll work out all the positions between independent banks and then send the money. They update the accounts, let's say, and put the money, they change the money from one reserve account to the other, all happening in the background 3 times a day. So there will be one of the reasons that happens, why the Bank of England or any central bank is so important to that, is that the risk involved when the central bank is doing it is basically zero. There's an operational risk clearly, but there's no financial risk. As the currency issuer, no one else is able or in that position to operate that system without risk. So the commercial banks are very happy to go with that system. And just to give another practical insight into how that works, for the commercial banks, certainly the smaller banks, sometimes the bigger banks have a slightly different setup, but they actually require, I've got a main account, a reserve main account, and a reserve pre-funded account. So basically, all of the banks have to put up some of the reserve accounts, segregate their money to say, so that the Bank of England knows there's a reserve balance waiting for them for any of those faster payments. This forces the banks to have prudent liquidity risk management, and they know they can draw the funds from the bank and allocate it, move it to another bank at any time with very low risk. And what's interesting, I'm going to short quote from the Bank of England themselves. So the Bank of England use a system called real-time gross settlement, which is an accounting system fundamentally. So the quote, in the real-time gross settlement is an accounting system that allows institutions to hold cash at the bank and settle obligations to each other central bank money for sterling, primarily the money held in accounts at the bank, is the ultimate secure and liquid asset, and therefore offers the lowest risk way for financial institutions to meet their payment obligations. So that is how the central bank is, pun intended, central to the movement of money in the payment system. A lot of information there, and it's a little bit technical, but it's worth trying to bring that to life and understand a little bit about how the pipework actually works and why the central bank is so key to money moving around the system. So if we move on to the next slide, so sort of a doubling back a little bit, providing a segue to the next section. So central bank role, and other presenters will probably talk more about this and give you a bit more detail. But why, if you go back, well, how did the central bank get into that position of being central to the payment system? Well, they're given a mandate by the government to do the things under point A. The one that's relevant here really for payments is a resilient financial system. Obviously, safe and sound banks plays a big part too. And a slight tangent, but I think I always like to make this point that for non-bankers, I don't know that people realise, when you've not worked in a role in the bank which faces off to the regulator, just where the sort of power balance really, it's not a marriage of equals. Certainly in the smaller and medium banks, and it's getting closer maybe in the bigger banks, but it's worth pointing out, if the regulator says jump, the answer is almost how high. It's always how high. The regulator is the boss. I think people realise that when you work in a bank, you realise that they set your requirements. They can sanction you if you're not doing anything. So there isn't this sort of commercial banks run amok. They really have to do what they're told. They're given that license by the central bank to be a bank, and it's worth too much money to muck about with too much, to be honest. So a little aside. So points B, why are they involved? Well, like I said, government mandate. They have to run the reserve accounts, and they remove credit risk as the currency issuer. So it really facilitates an effective payment system where risk is reduced. And then C, regulation. Now, the central bank will assume the role of the regulator. Normally, you heard a good bit from Andrew yesterday, sorry. And as Robbie said, I'm more of a prudential regulatory guy. So if there are any questions later, you can ask them to Andrew on this. But so the central bank is the regulator of the payment system. It does that through the Financial Conduct Authority as well as the PRA, but also specifically through the payment systems regulator. They are actually shared service. They share services with the Financial Conduct Authority, and they're really quite interlinked to the other payment regulators. So let's go back to the example, and we'll talk about the payment systems providers a little bit. This is an example again. If you move on to the next slide, we'll talk about the bit to the left, which is the start of it. Actually, we'll skip on for time on to the next one, if you don't mind. Do you know what? We'll go to the next one. We'll dive into that one. Yeah. So who are these payment service providers, and providing the hardware, providing the payment rails, lots of technical things, which I'll be honest, I know a bit about, but there's so much technology there, it's hard to be across it all. So, Visa, MasterCard, obvious, WorldPay, you'll have heard of Apple Pay. What we've seen actually is in open banking's come in. We'll talk about that a little bit more, but there's been a lot of new players into the the financial world of payments. Payment, and it's driven a lot by regulations. Payments are local in general. Payment systems in the US are different to the UK and different to somewhere in South America. Or it tends to be quite different depending on where you are. You have these companies, Visa, MasterCard, Stripe, they operate globally, but with local regulations tweaking the how they actually operate. Now, what they're all about is facilitating the customer journey. They're not replicating or substituting what we just talked about in terms of banks and central banks and that sort of the nuts and bolts of moving money around. But these guys are there to improve usability, choice, speed of delivery. In my new world, I use Stripe, and I can send out a payment link to anyone in the world, and they can pay in any method they want, and somehow miraculously the money arrives in the bank account. So it's great. So there's been great benefits from that. So what I would say is, thinking about this conference and the Scottish independence, is do you think they would want to operate in Scotland? Well, they're profit-seeking organisations, so I don't think I wouldn't need to go further than that to think, well, yes, Visa, MasterCard, these guys, they already operate in Scotland, so I don't know why they would walk away from a potential revenue stream. If I move on to the next slide, I'll skip that one too, because it leads us into the next one, so I'll just do them all in a winner. So as I mentioned there's been a lot of new payment regulations in the last, 15 years. In Europe, when UK was still in Europe, the PSD, Payment Services Directive, both the first and second one have come in, and they've been transformational actually, and PSD3's being discussed at the moment. And that was European legislation adopted in the UK. And open banking was really enacted by PSD2 in 2015. So since then, really, open banking has flourished. Now, open banking really just means that non-banks are able to use technology, APIs to get into the data. And what's driven the innovation in payments has been legislation from Europe and the UK locally to us, and anywhere else in the world, actually. So, we don't give government credit enough sometimes, probably, but it was a political decision to push forward technology, usability, and it was that legislation was implemented by central banks and their regulators. So, I worked in banks during these periods. There was a lot of fear. Banks were forced, kicking and screaming, really, to open up to third parties and let open banking happening, which facilitated all these new providers to improve customer experiences and journeys. And, there was a lot of fear. It turned out to be misplaced, and I think banks are now starting to embrace it. But the government, the central bank, played a key role in implementing those regulations, legislation, and regulating the banks to make sure they did what was wanted by the legislation and therefore the government. So just repeat that. That's the government, the legislation, the central bank, the regulators playing a critical role in creating the landscape for payments. So move on to the next slide. So a little bit about the regulator in the UK, well named. It's called the Payment Systems Regulator. Just a little bit of it. They have an £18 million budget, about 150 staff to regulate the payment systems in the UK. So that would be a proportionate cost for Scotland to have the same regulator. But what I've shown here is the payment systems, common ones in the UK just now, and who operates them. Now, it's probably a sensible structure, but I just wanted to point out some of the potential conflicts of interest and arguably incestuous relationships at play. So, if you think, so the government are given the payments are going between the banks and is the key facilitator of the payment system, as we've seen. So, they also specifically, the Bank of England runs the CHAP system. It's high value, and I think they feel like they just want ownership, direct ownership of that because of the high value. The central bank gives a mandate to pay UK. Then they operate BACS, checks, faster payment scheme. The central bank then regulates the payment systems provider via the payment systems regulator, presumably including themselves, which is interesting. So you can see every which way you turn, you get back to the central bank within the payments world. So it's some fairly heroic firewalls put up between these different worlds, and it operates well. The lack of risk in the central bank, it really drives that decision making. But it's I guess my point is, if you're going to have a stable and effective payment system in your currency, you cannot get away from the necessity for a central bank and a government that want it to work well. So that would be my conclusion. I think if we just skip that one, I've got a couple of final slides here. I just wanted to give a couple of quick points on payment systems around the world, just for we have to think internationally, as Robbie said. I just wanted to give context to, I'm talking about real-time payments and sort of wanted real-time payments. So they pushed for a system to be put in place. And since 2010, they have had a very effective real-time payment system working across the Nigerian banking sector. So I guess the point there is evidence is the need for, if your country wants it, if your government wants it, the technology exists. And to contrast that, Robbie talked a bit about Canada yesterday. They've been very backward in their payments approach in terms of real-time payments anyway. And we're very slow, only very recently achieved real-time payment capability, miles behind Nigeria, miles behind. So it's interesting to think, if we move on to the next slide, if we can follow up on a few, this is a chart I've taken from TransferWise showing different currencies and transfer speeds. So they move money all around the world in different jurisdictions. They've got good data. But again, on Canada, I think there's a couple of things there, because the US is pretty bad as well. It's legacy systems, political will. So size and maturity of economy does not necessarily correlate with payment sophistication and speed. So I think that, there's two sides to that. I mean, a new country, a new independent country that's got technology availability and people to work with and plans things can easily jump ahead. So it's actually an opportunity as much as anything else. So move on to the almost my final slide. So yeah, I guess that's what I'm talking about. There's some legacy. I guess I better try and wrap up. But yeah, so as I said, Canada and US are behind us, probably because of their legacy and their banking system being quite piecemeal across the country. Europe has led the way in payments in many senses, and you do see traditionally less developed countries jumping ahead technologically and without the legacy problems. So I put down there SEPA. I know Tim and Ian mentioned it yesterday. I guess really what I'd say is so the SEPA is single euro payment. I forgot what the A is. Doesn't matter. Payments. So there's a single system across the whole of Europe where they use the IBAN, which is international banking account number, which you can get for your UK bank account, but it's not used. As often, it's not used. We still have sort codes and accounts. So we should be thinking ahead to aligning ourselves internationally with IBANs as they've done in Europe, making that whole system more integrated and thinking ahead. Lastly, I put on here central bank digital currency. When you talk about payments, that's sort of hot topic these days. I thought I'd just give a couple of lines on that, pros and cons. So, in my view, so what that really means is that digital currencies exist. It's the pound's a digital currency. You can get it in hard, you can get it in notes, but fundamentally it whizzes around electronically. The central bank digital currency, what that would do is mean that every citizen would have an account in the central bank. So they would have a reserve account with the central bank, not just banks. So it would open up and remove that that special case for banks. So on the pros, it could be an easy solution to banking people who are unbanked. Every citizen gets a CBDC bank account. Any sort of social welfare payments go in there, so it could be a good thing. It's certainly going to not be hard to connect the dots in terms of payment systems because everything goes through the central bank anyway. On the negative sides, there is an issue of privacy. The government would know everything that you've done. From a commercial bank point of view, I was flagging it as a real risk because where are you going to put if you've got any doubt about the solvency of your bank, you're just going to move all your money to the central bank because there's no risk there. So it might disincentivize commercial banks, create new risks for the banking sector. But again, that's a bit of a political decision. How do you want your banking sector to work? And there may be different ways to work it. But there are pros and cons. It's interesting, but for me, it's not something that's necessary or something particularly exciting. I do like the idea of banking unbanked people, but I guess it becomes political. So I guess the overall summary, as I said at the start, independent Scotland wants to have an efficient, modern payment system with the right planning, the right engagement, the right skill set at the central bank. Not only is Scotland able to move to a Scottish currency payment system, but it's possible to improve it probably and be arguably market leading across the globe. And I think I've gone over, but I'm finished now. So It's weird, I can't get any feedback, so I don't know if everyone's even there.
Right, well, thank you very much, Luke. I mean, you may have gone over the time that you were allocated, but you managed to cover, I think, about 6 hours lectures for me. And certainly, there was a huge quantity of facts which were going through there. Most of the terms I was familiar with already, so I couldn't remember Single European Payments Area. I was thinking of the Scottish Environmental Payments Protection Agency. But apart from that, I will just, before I invite questions, I will just pass on a remark of Bill Gates. About 30 years ago, he wrote a paper which started, "Banking is necessary, banks are not." And I think that what you've seen there in Luke's presentation is that banking now consists largely of a series of accounting ledgers and a series of and a set of messaging systems. So everything is digital. Whether we have a digital currency, as it's called in the current debates, or whether we just have notes and coins, unless we have notes and coins, then we are using a digital banking system, and that's what we're aiming towards. So we've spent this morning already, we've been very much into the Ministry of Nuts and Bolts. I'll invite questions for Luke, and I'm delighted to see that there are a couple. I'll take this one first and then going to the back. Wait, could you wait for the microphone?
Model for banking at the moment is blockchain. So is there people looking at blockchain to make sure the Scottish currency is the most secure currency there is?
So Robbie, jump in. In terms of the Scottish currency, I'm not sure anybody's looking at anything. I think that's one of the themes that we're trying to point at this conference. I know in UK banking, it's a bit of a buzzword about how you integrate blockchain and work it. It's not my area of expertise, I've got to be clear, but I know that it's certainly always been discussed at some level in the UK banking sector. I certainly don't know of any, no one's talking about it in a Scottish independent context that I'm aware of. Robbie, you have anything to add on that?
Not very much, Luke. I mean, certainly at the Scottish level, there's nothing going on. But the Bank of England does have quite a bit of work. And actually, I think that one of the things to emphasize about all of this stuff with payment systems, we're looking at what we might consider to be developing countries. You mentioned Nigeria, but India and China are actually putting a huge amount of effort into trying to make certain that they have state-of-the-art systems. And India, in particular, is being quite aggressive in exporting. So if I was setting up a payment system in Scotland, I would probably not look so much, well, I certainly wouldn't look to the Bank of England and RTGS, real-time gross settlement. I would probably look much more to the United Arab Emirates, to Singapore, and to India for partners for effective working. And with all these systems as well, I think that one of the things which is changing very rapidly is the concept of interoperability, so that payment systems and ledgers will not just exist in one country, but will be connected through through international systems, so that real-time payments can occur between countries as well as within countries.
Okay, well, I'm open to employment as I pass the microphone on.
Yep, if you just send it to the back, Bill's got his hand up.
Thank you. Whoops, pardon me. Thank you. David Sanger, a correspondent for, I don't know, one of the American papers, one of the security correspondents, in his book called The Perfect Weapon, which is about cyber warfare, gave an example of the cyber warfare outfit, whatever it's called, of North Korea, who were told that they would have to be self-financing similar to when Napoleon started to go wandering in 1805. The Grand Army made sure the countries liberated, paid for it. And that they came with very close to actually doing a raid on the Central Bank of Bangladesh and shall we say, relieving it of a significant amount of its funds. Under these circumstances, one would assume that more advanced, like the USA and so on, could literally lift money from other countries' central banks, if you see what I mean. And is that not a potential issue? I can imagine, for instance, in an independence debate, people turning around and saying, well, your central banking cybersecurity won't be as good as the Bank of England, and someone will just, North Korea will come and just impoverish Scotland with, some keystrokes. I mean, I thought at first this was slightly absurd until I started listening to what you're saying.
I think, sorry, I could hear myself there, which always puts me off. I got a bit of echo. I haven't thought deeply about that, but what I would say is what Tim said yesterday and repeated here about all the pounds that stay in London, all the Scottish pounds are in Scotland, all the US dollars are in the USA. So I'm trying to think through how could they meaningfully take any of Scotland's wealth in the sense that you've mentioned there. So what are they going to take other than some accounting entries, which is, I guess, what Robbie's point as well is, if it's the Scottish currency, because really it's a set of accounting entries. So there's not, and if it's, so I haven't thought, obviously you can tell I have not thought too deeply about that. But my gut is not to be too worried about that, although it's an interesting question, particularly with other currencies. Robbie, you haven't thought more deeply about that than I have you? But I don't say it doesn't feel, because of what we're talking about with the digital currency. It's not like they're taking 2 tons of gold and sticking it on a cart and rolling away with it. I know it's cybersecurity, but because of the nature of the currency, I don't see that as a threat. But I'm open to be challenged on that.
Okay, so if I can just quickly jump in and say, to give you an idea of the scale that we're talking about, interbank settlements in the United States are regularly $10 trillion per day. That's 10 with 12 zeros after it. So for most people, that's quite a lot of money. Let me put that in context. It's about 5 months' national income. If that's disrupted for even a day, it's going to cause chaos. And so it's not, the risk in cyber warfare is not seen as being that money will be transferred from one country to another, that money will be stolen, but simply that you interrupt the messaging system. And by the way, I should say, is the actual settlements which take place. If we take into account all the financial derivatives and the payments which are then reversed out during the day because of a series of speculation, we're looking at a multiple of global national income. If you could disrupt that, and if we're talking about war situations. So if I was sitting in Moscow, if I was advising President Putin, I would say, if we have to go to war, let's not think about lobbing missiles. Let's think about breaking the banking system. In fact, there's an old Russian joke that at a May Day parade, what they had was larger and larger missiles. And then there was a file of men carrying briefcases, all in grey suits. And the president turned round to the field marshal, who was weighed down by his 250 medals. Comrade, who are these people? That's the Economist Corps. So that, I would have to say, is where the risks are likely to be. Right, so I'm not seeing any other questions at the moment. Bill is desperately trying to get rid of the microphone. It's not a black spot. Tim, I see your hands up.
Can I just briefly, can you hear me?
I think I will say that this will be the last question.
Hello? I was just going to come back, having had a moment to think about that question. I'm not sure if you can hear me. I can hear myself. So, yeah, no, sorry, to add to that, so I've thought about that a bit more. It's a huge operational risk, and if we're talking about the chance of cyber security and fraud, all the different types of that, it's actually, it never gets publicised, but it's a constant battle in the banking sector. It's one of the largest pieces of capital requirement. Chunky amount, really significant amount of money aside to cover fraud losses and cybersecurity threats and all of these things. A lot of things happen with being taken, like data being stolen or things being, Tesco had a publicised incident where we lost some customers' money. They all got their money back, but it is a significant issue, and I think making sure that we're on top of that, and I think it's a war sounds a bit strong, but it's a constant battle. If you're not on the attack, you're going to get overtaken by the cyber warriors, let's say. So the money can be taken out of the system if you've got bad systems and protection and fraud prevention, for sure. So yeah, it would be extremely important to stay on top of that, for sure.
Okay, thank you
Sorry,
very much.
carry on.
Yeah, Tim.
Just a very quick one. I often get asked about central bank digital currency. Do you think that this is something that we need to look at this stage, or is this something for after we've introduced the Scottish pound?
For me, so I get like a lot of these things. For me, it's a political decision. I think you could have it or you could not have it, but it's a political decision, which probably therefore makes it for me more sensible. Well, it's a decision to be made by the new government via their Treasury and Central Bank. I think if the whole world goes there and you've created and there's an expectation that that's what's happening, I don't see any. It's certainly worth considering. There's significant amount of papers being produced and thinking on it, but I don't know. I mean, if independence was next year, I'd be like, well, don't bother. But again, to your presentation yesterday, I think we should keep abreast of it and do the work as and when necessary, depending on how the climate changes.
Okay, right. Well, I'm going to draw this session to a close, or this part of the session to a close. So could I ask you again to thank Luke? I guess I'd better start to introduce our next speaker, who is Roger Mullin. I'm sure familiar to almost everyone here. He is the former MP for Kirkcaldy. He's an expert on international development. After his brief spell in Parliament, the voters of Kirkcaldy and Cowdenbeath unaccountably decided that they would prefer someone else. He was best known there for his work on Scottish limited partnerships. Since then, and I haven't put a note on this, but I think it's strategic lawsuits against public participation. Have I got that right, Roger? Yes, good. Right. So essentially what he is concerned about, if you know about this, is the abuse of power by privileged people. And with Scottish limited partnerships in particular, he is concerned with his work in Scottish limited partnerships. He's concerned about foreign money flowing too easily through the country. He subsequently became a business consultant, in which he did some work on what he's going to be talking about today, the establishment of stock exchanges. But his most recent work has been with the Adam Smith Global Foundation, and it was a great pleasure for me to work with him on this little book, which commemorates the 300th anniversary of Adam Smith's birth. Now, Roger managed to persuade Fife Council to pay for 2,000 copies. I'm pleased to tell you that that box is the last of them. So if you would like to get, this is a never to be repeated offer, I suspect. If you would like a copy, then please come and take one at the end. But for just now, I'd like to invite Roger to come to the stage and to talk about stock exchange formation.
Well, thank you very much, Robbie. Thank you. I'm not tall enough. Let me say at the outset, I don't speak as, for example, Luke was a professional involved in this area. I don't speak as an expert, and I don't speak for any organization. Sometimes I even doubt if I'm able to speak for myself. And when Robbie introduced and said this is a nuts and bolts session, I'm still trying to work out whether I'm a nut or whether I should bolt now. So, but I'll let you judge towards the end. Why did I get interested in the stock exchange? A good number of years ago, not a close friend, but an acquaintance, I would call him, who ran a business. It had been a family business. It had grown into quite a large family business and decided that he wanted to move into the world of making it a public company. And the only place he had to go, although it was an entirely Scottish-based company, the only place he had to go was London and the expense of listing in the London stock market. And in doing so, he said to me that one of the great disappointments he had was that all the people who had served him when he was growing the business, his accountants, his lawyers, and the like, they had to be dispensed with because he had to go with approved organizations, which I believe are largely around the London area. And this made me think about my international interest. When before I was an MP, I did about 27 international assignments, mainly in what would be called developing countries. And one of the things that I was always interested in was what's called capacity building, helping nations to build the institutions and the ways of working that would serve their future. And I thought what had happened to this business, and no doubt many others, is that we had been stripped of capacity in this area. And that was something which I thought just intuitively wasn't a particularly good idea. And so I did a little bit of a work on it. Now, as I say, there will be people no doubt in the audience who know many of the technicalities better than myself. I'm interested in this at a broader level, which sounds grand, but it's basically an excuse for saying you're not allowed to ask me any hard questions. So what is a stock exchange for? Basically, it raises funds for investment through things like selling stocks, through bonds, and other types of securities, as they're called. And investors can enter that marketplace through an exchange and buy stocks, buy bonds, and the like. And that provides often very competitive money to allow businesses, amongst others, but also municipal authorities and the like who can issue bonds to have funding to allow them to invest. So it's an important part, I would argue, an important element. It's not a magic wand but it is an element that is important to help countries grow. Now, before the coming of formal and what we understand as modern stock exchanges, there was, with businesses that had developed hundreds of years ago, there was always a bit of ad hoc, very small scale buying and selling taking place. But it was certainly not fit for when we come to the Industrial Revolution and times of great growth in society. It wasn't fit for purpose. And so stock exchanges, where it was formalized, where there was a floor at which you could come along and trade and see things physically happening and taking place, and where there was what the previous speaker talked about, where there was growing and effective legal requirements and regulation and the like that was taking place. So, what happened to Scotland? Did Scotland ever have a stock exchange? Well, Scotland had more than one. In 1844, 2 exchanges were created, one in Glasgow and one in Edinburgh. In 1845, a third was created in Aberdeen. In 1879, a fourth was created in Dundee, and I have to say, slightly to my surprise, I found out that a fifth stock market was created in Greenock in 1888, all serving at the time, of course, predominantly national or local markets. Very different from the type of exchanges that we have today. They were hugely important to Scotland's development, however. They were important players in the development of the railways, raising funds for that, for private capital and the like. Important in engineering, in shipbuilding, hence in Greenock, food and drink, and also for what are bonds, like municipal bonds, that were important. Now, I looked just yesterday at some historic data. By 1900, which of course was well before a lot of the developments in the economy that we would be familiar today, long before the coming of oil and the growth of energy sectors, long before the stimulation of new technologies that we are familiar today and things like that. But nonetheless, by 1900, the public listed companies in Scotland through Scottish stock exchanges had paid up capital of over £408 million. If I put that into today's money, that would be the equivalent of £42 billion through small local stock exchanges before the type of development internationally. And they helped that time, of course, fuel much of the change that was happening in Scotland. However, when you look more recently at what has been happening in the 20th century, as I'm sure you'll be familiar with in other areas of life, there was a trend towards increasing centralization. There was a strong pull, a strong magnet from the south, particularly in the London area. And gradually these exchanges became somewhat smaller in their significance. Fast forward 60-ish years, in 1962 there was a report that was very important, the Jenkins report. This was not Roy Jenkins, this was a judge, Lord Jenkins, produced a report. And that became a spur to create a single stock exchange for Scotland. And eventually, a full merger of all the then existing exchanges took place, and a full merger in 1971 to create the Scottish Stock Exchange. How long did the Scottish Stock Exchange last? 2 years. In 1973, it was completely submerged within the London Stock Exchange. And all the services and the other things that are associated with it went south. That is one historic trend. But given I mentioned my international interest, there was something that I thought was very strange about that. One of the countries I did quite a lot of work in, just around the time of its independence and just after, was the African country of Namibia. Right? It's a very large country geographically, but its population is only 2.5 million. And it had lived under the yoke of a South African apartheid regime, so you can imagine the need for development was great in a country given its history like that. And in population terms, half the size of Scotland. One of the things it did was it gradually moved towards establishing its own Namibian stock exchange, initially very small. It has grown significantly. And then when I looked, I found another interesting thing. In 1961, around the time of the Jenkins report, when it was finally, as it were, ending the existence of a stock exchange for Scotland, eventually, the World Federation of Exchanges was created. And what has happened since that period internationally is there has been a significant growth in the number of stock exchanges throughout the world. So while we were on a path which saw the ending, many other countries were joining the world in terms of the trading that could take place via stock exchanges. One of the things that I was interested in, too, was to look not so much at Namibia or African exchanges, but to look closer to home, what had happened. Right? And what we have just across the water in Dublin, there's a Dublin Stock Exchange. If you look at 10 years ago, at the time of the independence referendum, right, the Dublin Stock Exchange, there was a study undertaken at the same time, and it said that the Dublin Stock Exchange supported 2,000 jobs in Ireland directly, and it was worth over 200 million in local economic impact per year. That was before, in 2018, it decided for a whole host of reasons to join an organization called Euronext, which was the development of a federation of stock exchanges in Europe. These exchanges involved the stock exchanges in Amsterdam, Brussels, Lisbon, Milan, Oslo, Paris, Dublin. They share a very sophisticated platform for trading. Again, this had parallels with what Luke was talking about in terms of the sophistication. And they use a system called the Optic platform. To give you an idea of how significant they have become, they currently have on offer over 56,000 bonds from over 100 countries internationally. And Dublin is now part of that federation. So I am not equipped to decide what the best way for Scotland to establish and re-establish itself. Scotland may be interested in being part of the Euronext family, given our ambitions to re-enter the European community, for example, European Union. However, I have some hopes that I hope those who might be interested in studying how to set one up for Scotland might be interested in looking at. Firstly, Scotland is in an ideal place to become known for establishing credentials for green companies and green bonds. And that would give us a specialism, I think, that would serve Scotland's interests as well as move things forward in international terms. I also think one of the things that I always find as a tragedy, our excellent universities are often creating very significant spin-off companies, but they're so successful, many of them have to effectively move south or overseas to raise the capital that's needed. Perhaps we could have a fairly unique exchange that partners include the universities to look at how we can bring systems together. And in that way, I think we could help to grow Scotland's economy. Now, I hope you'll forgive me for not being a technical expert and not having any nuts or bolts to throw at you, but I hope you found at least something of the history and what has interested me in this subject of value to you. So thank you very much. And there's a free book. For all those who are still awake after listening to me, you get a free book.
Okay, so thank you very much for that, Roger. It was, as I expected, an excellent tour of what the issues associated with this. One thing which I think perhaps you didn't mention when you were talking about bonds is that the largest issue of bonds are, of course, governments. Yeah. So if we are going to have a Scottish financial sector after independence, we can expect many of these bonds, perhaps many of the green bonds that you were talking about, to be issued by the Government of Scotland. I'm going to leave, so thank you again for that, and I'm going to open the floor up for questions. I can see Kieran at the front, and I'm sorry, and then at the back.
Roger, that was really, really interesting. Thank you for that. I know that this has been a project that you and Michelle Thompson have worked on before. I wondered how far you had gotten with it and what kind of help you need to develop it. Yesterday I spoke to Simon Forrest. He is looking for investment for his company, Nova Energy. He cannot find it. I know there's money in Scotland that would want to invest in it. How can we get this up and running?
Right. Well, I know that since the closing, effectively, the Scottish Stock Exchange in 1973, I'm aware of at least 3 attempts, entirely private sector, without government backing, to try and get a stock exchange up and running. Now, I don't know the ins and outs of them all, but my belief is that probably what they found was the scale of investment was such, and the speculation. And the problem would be, as I understand it, regulation-wise, they would need to get approval from the Bank of England. Right? My view would be, firstly, it doesn't stop us planning for an independent Scotland, and we should do that. But there is nothing that I can see that would actually prevent, if approvals were possible to get, to begin to work towards establishing something sooner rather than later. But because of the regulation and the politics involved, I think it would have to involve in some way, not just private sector, but something representing the Scottish Government, whether it's through Scottish National Investment Bank or some other means. So I think we would need to put together something that was a bit different from just an attempt by the private sector to get something going. That would be my feeling. There's a gentleman.
Hi. Sorry, I've got one very simple question and one probably much more complicated. The first, I'll start with that, and you can stop me if you want. I was listening to the list of the participating cities in the Euronext, and I didn't hear Frankfurt. I may have missed it.
No, it's not part.
Is there a reason for that?
I don't know. Well, presumably there's a reason, but I don't know what the reason actually is.
Yeah.
Maybe it feels because it's such a size, maybe it feels it does not require to be part of a federation of exchanges.
Okay.
But, so I don't know. I mean, I was not saying Scotland would have to join that. I was just using that as an example. There are different ways in which markets are going about positioning themselves.
Yeah, my second question then was kind of, you lead me to it really, which is, just to paraphrase your argument, is that this would be a beneficial development for Scotland, quite separately from the question of independence, of whether or not Scotland was ever to become independent. Your argument, I think, is that this would be a beneficial thing for industry in Scotland.
Well,
arguably, therefore, for the whole of the UK.
I personally think it would. I can only express a personal view, right? So I personally think it would be advantageous. I wish we had one now operating. I wish companies didn't have to ignore the country that they're growing up in and having to go somewhere else to raise the capital that they need for the scale of investment and growth that they want to pursue. So I mean, there are hurdles. I've mentioned the regulatory hurdle and the approvals. But I mean, there is nothing in law that I understand that says Scotland could not have a stock exchange.
So
we would need to have it well worked out. There would need to be brains much better than myself brought together to work out exactly what this would be, and in such a way that would make it very difficult for any regulators to deny its ability to open and start trading.
So that ought to separate it out from
yes.
the whole question of independence and therefore party politics.
Yeah. I mean, I think this would be a good thing that people of many persuasions could agree to coalesce around.
Thank you.
Okay, I see, Ian, your hand's up, so could you bring the microphone to the front, please? Oh, no, or do you have a question yourself?
Roger, the technical issue is that financial services are not devolved, so all decisions have to be made, and the regulation would have to be from Westminster.
That's right.
So with that technical clarification, Ian, you've got a question.
Thank you, Roger. That was very, very interesting. Yesterday we had a presentation from a representative of the European movement in Scotland, and he rather scolded everyone in the audience here from lacking ambition and hope for creating industries and recreating financial services in Scotland. He was obviously talking to the wrong audience, because there is nobody in this audience that doesn't have ambition for Scotland and Scotland to do much better. But I just wondered if you are in any discussion with David Clark from the European movement in Scotland and with the Scottish Government to take this initiative forward?
No, I'm not in discussion. I mean, I don't find people knocking down my door wanting to discuss anything with me, other than Tim. So I think I've met David Clark a couple of times, and obviously know a few of the ministers, but I'm not aware that there's any initiative like this happening. I mean, I certainly think it would be very welcome to me if people were willing to begin to put their hats on. You know, it's surely not beyond the means that are available in Scotland to commission a proper study to detail it. I think it would have to start there, you know. But, and I do know that there's expertise around in Scotland. There's plenty of expertise that could be brought in to get advice. And so it is something that I think is perfectly feasible to get started. All we need to do is to persuade government and others that it's something worthwhile pursuing.
Okay, now, ladies and gentlemen, I thought since there were only two speakers, I'd better have some notes ready in case I had to fill out the time. But I'm delighted to see we've got one last question here. I'm aware we've got one last question here. I'm aware that Tim is standing beside me, which makes me think it must be time for lunch, and certainly it feels a long time since breakfast for me. So if you could go ahead, sir.
Thank you. It's really to make a comment and to share something, because I was responsible for listing Namibian breweries on the Namibian Stock Exchange at a time when it was a very small stock exchange. And I also listed other companies, both in South Africa, but also in Namibia. The crucial thing about listing in Namibia was to enable pension funds that were in Namibia to invest not in South African companies, but in Namibian companies. And so it is a developmental thing. It provides capital to organizations who want to grow, and it is also an ability for money to come in from international sources, which will then provide the market for you within the country. So I think that's a very important thing to think about, getting capital from international sources to come into Scotland. The other thing to say is that a stock exchange doesn't only deal with companies that are listed in the country itself. There is an international market, and if you think of London, London trades shares from global companies from all over the world. That trade moves through London. It provides London with brokerage. It provides jobs for people. There's no reason why, if there was a stock exchange in Scotland, that could not happen for Siemens or for whatever other countries want to have a listing within Scotland as well.
Absolutely.
Thank you.
Very much. Thank you for confirming Namibia did have a stock exchange. I was right.
Okay. Ladies and gentlemen, the spontaneous applause draws us to a close.